Hello, and thank you for joining us today. My name's Emma Sisson, and I'm joined by Andrew Adey and Layla Hart-Svensson from SEC Newgate. Today, we're going to be talking about how having strong credentials in terms of your environmental, social, and governance practices is essential to maximising the number of potential investors in your company. So, Andrew, Layla, thank you so much for joining me today. Now, Andrew, just turning the first question to you. How important is ESG for businesses and investors?
ESG is critical for businesses and investors because the way businesses are judged now has completely changed. So in the past, a good business was one that just made loads of money. Today, a good business has to deliver much wider benefits to society. It has to decarbonise. It has to meet certain political agendas for change. So ESG is critical. I think the key thing I would say is that ESG is not a strategy. It's ESG is a metric through which you measure non-balance sheet performance for businesses. But when it comes to how investors and other businesses and employers and employees judge a good business, then the non-financial performance part, the ESG part, is absolutely critical.
Mm-hmm. Now, is it the right approach that in the face of, investor and activist pressure, some companies may change their environmental and social commitments that they've got going on? Can you explain a bit more about what you've seen there?
Yeah, I mean, I would say it definitely isn't the right approach. I would say that any business has to ask why they're doing it. And I think the big challenge, and I have enormous sympathy for businesses on this, the big challenge is that often the loudest voices in the room are the ones that have the shortest timescales in mind for change. So, if you have activist investors or unions or, consumer activist groups, they will want change immediately and they want to report that back to their stakeholders immediately. Actually, when you look at business, the timeframes they're working on should be 10, 25 years into the future. And when you think about particularly things like net zero by 2050 is now a legal requirement in about 150 countries. Wow. That's a 25-year time frame. That's the time frame that business has to be looking to because everything changes within that time frame. The transition to net zero changes business models, it changes investments, and that's the time frame business has to focus on rather than immediate needs of loud voices in the room.
Mm-hmm. What can businesses actually do to balance the need for profit and returns with a need to deliver wider stakeholder impact?
I mean, I think what business has to do is focus on both profit and impact. So, businesses still exist to make money, and there is nothing wrong with that. But business also has to recognise that by just making different choices, they can get other outcomes that benefit other stakeholders, and that's how people judge business success today. So I think the key thing that business has to realise is that they need a strategy, they need to communicate that very effectively, people need to buy into it, they need to trust business, because otherwise they will get agitated off course.
Mm-hmm. Now, Layla, turning to you, SEC Newgate recently has published its annual report, Responsible Business, What the UK Public Expects. So what does the public expect of businesses in 2024?
Well, first, we have to contextualise expectations within wider public perceptions of how well businesses are doing with regard to responsible business conduct. And only 42% of the UK public actually feel that companies are behaving responsibly and doing the right thing. And also, it's interesting because there's a huge performance gap, and that's between how important they feel that it is for companies to be behaving in responsible ways versus how well they're actually performing, if they're delivering good performance. And you've got a 75% versus 43% gap there in terms of good performance. So 32% overall. And I think what you've seen this year with our study is that the best performing sectors tend to be renewable energy, healthcare, supermarkets, and the worst performers are gaming, fashion, and social media platforms. I think contrasting with this backdrop of, pretty poor perceptions really, you have very high expectations from the public. So 6 in 10 actually feel that companies should play a more active role in society, chiming in with what you were saying, Andrew. And 3/4 see the responsibility for this lying squarely on the shoulders of leaders. So it really is leading by example. It's interesting to note that the public also feel that companies can be delivering very well and on, delivering their profit as well as delivering on their ESG responsibilities.
Okay. And what constitutes responsible business in the eyes of the public?
Well, governance is the key priority. So 8 in 10 feel that it's important for companies to be treating their employees fairly and also being open and transparent as well. However, following hot on the heels of that, 7 in 10 also feel it's really important for them to be promoting sustainability and reducing environmental harm, as well as supporting and collaborating with local communities. And I think what's interesting here is that you see these environmental and social responsibilities as just as important as the responsibility that companies have to deliver good financial performance, which is also 7 in 10 as well. And I think the other thing to note is that companies, well, the public really expect companies to tell them how they're improving about their ESG performance. They want to hear about it. So there is really a clarity of action needed about how they're communicating with the public.
In whose interest should businesses be acting from the public's viewpoint?
It's about acting in the interests of all stakeholders, not just the shareholders. And when we say that, what we mean is, yes, shareholders, but also customers, staff, the communities in which they impact, and also wider society.
Okay, coming to the issue of shareholders there, in the report, you also highlighted that elevated expectations of retail shareholders and retail investors, how do their view differ from that of the general public when it comes to responsible businesses?
It's much stronger across the board, and that is largely driven by Gen Y and Gen Z investor cohorts. That's what's interesting here. And that trend, that younger generational trend, really bears out across the majority of the data that we've seen in responsible business this year. And I think it really is illuminated when you ask a question around the influencing factors which prioritise when they will invest in a company or not. So, as you would expect, anticipated financial return is the top priority factor. And that's closely followed by a company's growth prospects as well as their risk profile. But just behind that, at 73%, are a company's ethics and responsible behaviours. So that's only 12% less than anticipated financial return. And behind that, at 69%, you have environmental and sustainability factors. So I think what we can say from this research is that these responsible business considerations are top of mind for retail investors.
A lot of key takeaways there for companies to consider. Andrew, Layla, thank you so much.
Thanks very much.
Thanks. You can hear more at the London Stock Exchange's IPO Forum on Thursday, 14th of November. Thanks very much for watching.